Hi, I'm Justin Spiro, trader here at SMB Capital. In this video, I'll break down my entries and exits bar by bar and teach you how to time your trades just like the traders on our desk. Welcome back to the Bar by Bar series. After receiving numerous requests to bring these videos back, the time has finally come. Let's jump right into it. Here are just a few things you'll learn in this video. 1. High probability mean reversion trades using 2-day VWAP on both the short and the long side. 2. How to analyze and execute market trades using SPY and TIck during geopolitical events that are moving the market. 3. How to identify, analyze, and capitalize on penny stocks during geopolitical events, tailored especially for low flow penny stock traders, particularly those with a small account. We're filming this on Monday, April 15th, and I'm going to review my top trades from the last 2 weeks. As we review these tickers, you may see other setups in them that make sense to you, and I encourage you and challenge you to go back and explore those. So first, we're going to get started talking about ACB, which is a marijuana stock. There's been a lot of catalysts driving the marijuana stocks as of late, which include pressure on the DEA to expedite its decision to reschedule marijuana in the US. On the 22nd, where you see this volume come in, Germany passed a law to legalize cannabis, and you could also see that ACB breaks above the 100-day moving average here. And it hasn't done that since early September. So we see that it's starting to break this downtrend, and we see volume start to come in. From there, ACB is kind of just in this consolidation between $5 and $4, but interestingly enough, we also have the 200-day moving average, which is this yellow line here, acting as resistance. When we're looking at a daily chart, everyone should be looking at these simple moving averages. The 200, the 100, the 50, 20, 10, and 5. We see the 100 acting as support and the 200 acting as resistance, and we're seeing volume start to flow into ACB for the first time since September. On April 3rd, on this breakout here, there's some news that the Cannabis Council of Canada has a new president who is an executive at CGC, which is another publicly traded marijuana stock. And he also did some political work. And apparently he was going to be great for the industry, which causes this breakout above the 200-day moving average and above $5. And in addition to that, here's another big piece of the puzzle. ACB has 26% short interest, meaning that 26% of the tradable float is short. That is a huge amount of short interest for a stock. Anything over like 10, 15%, we consider a lot. Given that catalyst that really broke out ACB above the 200-day, you might be asking yourself, like, why trade ACB rather than CGC, given that the news was based around the former CGC CEO taking this position? And that's simply because ACB has a much cleaner setup. This is CGC. Yeah, it's moving up with volume, but I really think the setup in ACB is much cleaner. And you can see that nice tight consolidation and the 200 acting as resistance. So let's zoom into these trades. Now, on the day that ACB breaks out, there are plenty of trades to take, but I made the most money on the second day and the third day of this news. I would challenge you all to go back and look at some of these trades from day one of the breakout. You have this nice consolidation wedge break as it holds way above VWAP here. You have the break of highs midday that leads to this nice trend higher. And you can see on this day, we topped out at $7.39. Going into day two of this breakout, I want to look for a pullback to 2-day VWAP. Now, 2-day VWAP could be looked at as where the average buyer and seller was from the previous day. And it's a very powerful level that we like to trade against here at SMB. And that's simply where VWAP flattens out in the after hours. That's your 2-day VWAP. And we want to look at that anytime there's a big high volume breakout or there's a big blow off that triggers a backside. Really important level to be watching after those two things happen. So coming into the morning, we get this pullback back into 2-day VWAP. And what's really interesting is, and what triggers this trade is this volume that comes into 2-day VWAP. So you can see off the open, there's some profit taking, it's moving lower, and this candle is very interesting to me. So initially, this candle opens up as a red candle, dips below that 2-day VWAP, and immediately rebids and goes green and forms this nice wick. I would call this like a reversal candle, and you can see that nice volume that comes in there. Once I see that, I'm buying this, and my stop is simply a few cents below low of day. In addition, this candle closes above the previous bar's high, breaking this initial downtrend in the morning. This is a great long for a mean reversion long after a day one breakout on extremely high volume. We want to look to buy dips into potential support levels, and this bar here really triggered that for me. So as I enter the position, I notice that we are popping into VWAP, and normally for a mean reversion trade like this, I would begin to scale out of some and take profits into VWAP just in case that VWAP acts as resistance. However, we effortlessly push right through VWAP on the second highest volume bar of the day. And I opt to, rather than take profits, I'm going to hold this position as I see that momentum coming in on the time and sales. We break back over VWAP, we break back over the 9 EMA, which is this blue line here, and we cross right over the 21 EMA. And now I'm noticing that that momentum is really coming in. You're starting to see that flood of green prints, and it looks totally different than what we saw in the morning. There's a complete change in character on the tape that leads to this squeeze out above the opening price. So we have the stock going green on the day. And it also breaks above the previous day's high here that you see at $7.39. We start to blow off on pretty high volume. We now have the second highest volume bar of the morning into that move. And we form this little wick here. And I start to take profits on the position. But what I'm thinking is that shorts from the morning who are piling in this, thinking that, okay, yesterday was a really big move. This news is not that important. They're going to start to get squeezed out. In addition, I know that short interest is 26% on this. So now that we're above the day one high, this move really has the chance to follow through and make new highs. In addition, at this point, what I'm noticing is that the volume is extremely high and it's on track to surpass the prior day's volume, which leads me to believe, again, that this could really continue to squeeze. From there, we get a pullback into VWAP. We bounce, reclaim VWAP, reclaim the 9 and 21 EMA, and begin to consolidate at the top of that range. At this point, what I feel like works best is to move your stop from low of day to just below this higher low. Now that the stock reclaimed VWAP, we're getting confirmation that the bottom could be in for the morning. We're holding back over VWAP. I want to protect the profits on this trade, and I feel like this higher low is a great stop. From there, I add back what I sold on this move as we break to new highs. And then from there, you get this really nice trend that breaks through the pre-market high. And if we zoom out, we could take a look at that. The pre-market high at $8, and we break that effortlessly. No resistance at that pre-market high, which tells me that shorts are starting to panic. We break above $8, begin to hold, and this trend from the lows starts to break. We could draw that trend line there. We start to hold back below the pre-market high and $8, and I sell this long position. Interestingly, later in the day, and also I just want to point out that that blow off on volume, which you see here, highlighted in yellow. We get the highest volume bar of the day at 10.25, above the pre-market high. It breaks back below the 9 EMA, begins to hold back below $8, breaks this downtrend. It's just a really nice spot to take profits. I feel like we have an overwhelming amount of checks in favor at that point to take profits on this position. ACB does end up holding back above $8 and makes a new high. What's interesting about this is if we zoom out from the 2 minute to the 1 minute, you could see that this is clearly a blow off. Now we have the highest volume bar of the day. The stock does end up making a new high at 888 before it starts to break down, and it closes at the bottom 20% of the intraday range, below VWAP, below the opening price. And this signals to me that the backside is in. So going into the second day of the backside trade, I'm looking for a short now. Since my backside criteria is met given the blow off and the close at the bottom through 20% of the range, below VWAP, red on the day, I don't want to be chasing into down moves on the second day. Since I have conviction that the backside is in, what I want to do is I want to look for pops into resistance levels and turns off of those resistance levels to short into. In the morning, my game plan is to short a pop into 2-day VWAP and add into the turn. And you can see where the VWAP flattens out. That's your 2-day VWAP, and it's right around $7.70. Off the open, we get this clean trend higher into 770, and then we get the highest volume bar of the morning at 935. Typically, we'll see the highest volume bar of the day, the first few minutes of the open, if not at 930. And for this to happen into 2-day VWAP, and you get this nice wick and failure, it can't even quite test that 2-day VWAP and begins to fail. As it turns, I'm starting to short this. As it breaks this uptrend, defined as breaking the prior bar's low, which hasn't happened the whole morning, that's confirmation for me to add to my position. At this point, it's pretty safe to put your stop at high of day. After this blow off and turn and break of this 1 minute trend, this should follow through to the downside. Typically for a trade like this, I would start to cover a little bit into VWAP as it confirms, but in this instance, it slices right through VWAP effortlessly. And really, that's a sign for me that this trade is working perfectly. It's not trying to hold VWAP. It's not trying to bounce from VWAP. It's slicing right through on high volume. And in addition to that, after that move, it begins to retest and fail from VWAP. So after VWAP fails, the stock can't get back above VWAP. It starts to roll towards low of day. And as we come into lows, I want to start piecing out of some of this and ringing the cash register, as we like to say. However, I have a great price. I'm extremely confident now that this stock has rolled red, failed from 2-day VWAP, sliced through VWAP effortlessly, that this could continue to roll over. So since the failure from 2-day VWAP, we get our first bounce. It can't even quite test VWAP. It is getting back over the 9 and 21 EMA, but that's not a concern to me. This is a bigger picture short after it blew off the prior day on huge volume. And I expect this trade to at least test the prior day's low down at 646. We fail to retrace to VWAP. We start to trade lower. We're holding back below the 9 EMA. And as we trade into the previous day's low, we start to hold. I'm being patient with this, and I'm watching to see if it's going to follow through to the downside or start to break back above this 9 EMA. And what we end up with is a save at the prior day's low. And you can see that volume come in. Either there's buyers willing to step in there or there's shorts beginning to cover at the prior day's low. We're still holding below the 9 EMA, so I feel fairly confident about it. And as we make a new low, that new low fails to follow through. and we hold back over, and I begin to cover an additional piece of my short position. At this point, if we simply just draw this trend line, I'm left with about 25% of my original position, and this is a trade to hold for me until this bigger short-term downtrend breaks. The stock makes a new low, it tries to hold under yesterday's low, retests, tries to make another new low here, and there's no follow through. It makes a new low by a few cents, and you could see that volume beginning to step in. At the same time, starting to break back above that 9 and 21 EMA. It retests yesterday's low, trying to be patient with it, and then it breaks back above, and I close out of the remainder of my position. So, in conclusion, all momentum day traders should be watching that 2-day VWAP, especially after a big day one move on high volume, and especially after a big blow off and backside. That 2-day VWAP is an extremely strong level to trade off of after each of those scenarios. So now we'll go over his trade in SPY that took place on Friday, April 12th. For a market trade like this, we really need to give this trade a lot of context, and I really want to walk everyone through my exact thought process. On April 10th, which was a Wednesday, we had CPI. CPI came in 1/10 higher than expected across the board. In addition, it was the third month in a row where CPI came in hotter than expected. Also, the chances of a June rate cut went from 61% to 28%. And all of this sounds really bad, but fact of the matter is the market fails to take out that pre-market low at 512 and just chops for the remainder of the CPI day. If this was going to be a true trend day, we would have taken out that pre-market low really in the first hour of trade, and we were not able to do that. The market just chops around into the next day, which was PPI. So PPI is released. It comes in line versus estimates, and year over year, it is 1/10 cooler than expected. PPI is also the Fed's preferred inflation gauge, and you can see when that number is released, we retest that 512 area and bounce from it. Off the open, SPY retests that 512 again. So now we have a really clear level to trade against. For me, moving forward, that 512 area is the line in the sand. If we are holding below 512, the market could really break down. And I would call that 512 level a line in the sand and also like a very clear inflection point for the market. So we retest that 512 in the morning and we rip higher into the close. Now, I feel that a lot of participants have FOMO and they're chasing this grind higher into the close with the idea that, hey, maybe the market doesn't care about inflation as much as we thought it did. Given all that negative news that we talked about and the chances of a June rate cut going from 60% to 28%, it's just really interesting that the market couldn't break down on that and we have this strong trend. So really, the chase is on. And people have FOMO thinking that they're going to miss the next leg higher in the market. And this sets up the trade for April 12th. So you can see in the pre-market here, the market opens up pretty much unchanged in the pre-market, and then we begin to grind lower. So early in the morning, around 6 a.m., the Wall Street Journal reported that there's going to be a potential retaliatory attack from Iran and not a proxy group, which would be a pretty major escalation in the Middle East. And from there, it seemed like there was a new headline about this every 5 minutes that an attack was imminent from Iran. And you could see that the market begins to drift lower in the pre-market, and we pretty much give back almost all of that afternoon move going into the open. Given the prior day strength, we could really hypothesize that a lot of those longs that were chasing this move, having FOMO, scared that they're going to miss the second leg higher, they're going to start to be pretty nervous about this. In addition, going into the weekend with that potential war escalating in the Middle East, Why would short-term traders want to hold stocks long over the weekend? All of that gets me started to think about a potential short in the market. Let's dive into the trade, and we're going to pull up the tick index. So on a day where the market is in play, you're definitely going to want to watch the tick. Every day I'm watching the tick, but it becomes much more important when the overall market is in play from a geopolitical event like this. Off the open, the market attempts to bounce, and you could see that the tick opens up around negative 500 and attempts to trade above zero, and that move fails. This tells us that breadth is weak on this bounce. There's bearish sentiment. There's a lack of a potential reversal from this move. The big money is scared to push stocks higher. There's just a ton of bearish sentiment. In addition, if we look at the advanced decline line, we could see that the advanced decline opens up at negative 1,000, attempts to bounce, stays negative, and rolls over and begins to make new lows. SPY attempts to take out that pre-market low at 513.45, bounces into the 9 EMA, fails, and takes out that pre-market low and low of day on volume. In addition, you could see that this bounce coincides with the 9 EMA, fails from the 9 EMA, but also fails from the opening price. So now SPY is showing us that it's trying to go green on the day, it's trying to bounce, and it can't. And this results in a really nice momentum short down to that key 512 area. However, the big trade for me came on this bounce to VWAP. So we bounce from that 512, that higher time frame support level where you can see that double bottom from the last 2 days, our key inflection point. We bounce from there and retest VWAP. What's interesting is as we retest VWAP, we put in the highest tick of the day and the market can't break above VWAP. As we fail from VWAP, I'm starting to short. Given that this is a bigger picture trade for me, and I think we could see a sell-off into the weekend based on this news, and as this trade's developing, these news headlines about the imminent attack are pouring in. There are sirens going off in Israel, and the news is just it's becoming more clear that this attack is going to happen. We fail from VWAP and I'm taking a short. This is a very popular trade after a strong downtrend in the morning. After a pop into VWAP, we call that a VWAP continuation. I'm taking a short here, and given that this is a bigger picture trade idea, or for me a trade to hold, I want to give this room to work. And I'm thinking that I'm going to stop out of this trade if SPY reclaims the opening price at 514.40 and holds above the opening price and holds above VWAP. That shouldn't happen if this is going to be a truly negative catalyst and SPY is going to trend into the close. We pop and fail into VWAP again, this time on a much lower tick. In addition to that, SPY begins to break the short-term downtrend from 512, and I start to feel pretty confident about this trade. From there, we roll over and we break lows on 1,000 tick. This is our first 1,000 tick of the day, and that tells me the market is getting short-term oversold. And for me, it's smart to ring the register into something like that. We got a very clear failure from VWAP, we broke that uptrend, and we got a perfect trend down, and momentum started to come in as we break that low of day, and we're seeing that negative 1,000 tick, telling us that the market is short-term oversold. And I want to begin to cover some of my position into that and ring the register. From that first negative 1,000 tick of the day, we get a pop into zero on the tick. And from a negative 1,000 to zero, you could see that the market could barely bounce and that 9 EMA is becoming resistance. And as we break to new lows, I'm adding that momentum short back. So what I covered here on that 1,000 tick, I'm simply adding it back with a stop just above this move here. We begin to trend lower and we start to consolidate. What I notice is that the 50-day simple moving average is right in this area at 510.06. For me, the momentum is slowing down. The market's beginning to consolidate. We tap that 50-day SMA to the tick, and we begin to bounce and break back above the 9 EMA. And I am ringing the register and covering that momentum add here. And I'm left with a core position. And also what I want to mention is as we break lows here on volume, there's really no point for me to keep my stop above the opening price at 514.40. At this point, I'm thinking that this should not trade back over VWAP. This should not take out this double top into VWAP. And I'm simply adjusting my stop a few cents below this wick high here into VWAP. So my stop becomes just a little bit over 514. So essentially now I have a risk-free trade. There's no way that I could lose on this trade. And now I have a core position from great prices, and I really want to give this a chance to trend into the close. So I'm being patient with the trade. The market makes a new low, reclaims that 50, retests that 50, and bounces from it. So essentially what we have now is a low, a higher low, and we're bouncing from that 50. And now I'm going to take profits on my core position, and I'm left with half of that core. In case during power hour, which we would call the last hour of the day from 3 to 4, volume typically begins flowing back into the market. And we see that we're able to break that 50. Volume starts coming in the last 20 minutes or so. You can see that increase in volume. We put in another higher low after a failed follow through new low. So the market makes a new low. We can't follow through to the downside. We put in a higher low and reclaim the 50-day. And I cover the remainder of my position. So the next trade that we're going to go over is in TPET. So as the conflict between Iran and Israel begins to heat up, it's a smart idea to go back and look at what stocks you traded when that conflict all started in the Middle East between Israel and Hamas. And I could see that TPET was one of those stocks that I traded back in October as Israel was gearing up to retaliate. And you could see in October, it had a pretty nice move from 30 cents up to about 75 cents. So zooming back out, we could see that before Friday, this TPET already had volumes, which definitely interested me in this. Before Friday, I noticed that there was volume coming into this stock. So zooming into this a little bit more, I see this really clear level at 30 cents. So as volume started to begin to creep in there, the prior Tuesday, you could see it topped out at 30 cents. Wednesday, in the pre-market, it tested 30 cents. Thursday, off the open, it retested 30 cents. Given the news flow, I really wanted to buy this over 30 cents. So just had my alert set on TPET at 30 cents. And I notice that as we cross over 30 cents, volume begins to come in. It fails from 30 cents and it pulls back. Now, around 11 o'clock, we break above the pre-market high at 32 cents and volume starts to come in. I bought this as it broke higher above 32 cents. So you could see it gets above 32, it holds 32, it dips back into the 9 EMA, reclaims 32, and volume begins to come in. I'm buying this and I'm willing to accept the risk to low of day. If this stock makes a new low after this volume comes in, it's going to be a clear failure for me, and I'm willing to accept that risk on this stock. In addition, it's only a 26 million share float, and we have a very clear resistance level to work with, right? It fails from 30 cents, begins to hold over 30 cents, and then we see that big volume come in over the pre-market high. And to put that volume into perspective, if we zoom out a little bit, You could see that that's the highest 2-minute volume bar since this move started. And in addition, that volume, it sustains. We're getting consecutive 2 million, 3 million, 4 million share volume bars. And this is telling me that this could really squeeze, especially as we're getting confirmation via the news and the headlines that are coming in that the attack is imminent. This is an oil stock. You know, if the war escalates in the Middle East, at least in the short term, oil is definitely going to spike. And we got proof that this stock could run based on what happened back in October. Willing to accept that risk of low of day, and I really want to be patient and wait for this trade to play out. So you could see that we're holding over 32 cents, that volume is sustaining, and we're holding well above VWAP. There's so much buying that this stock can't even pull back and retest VWAP, and it continues to consolidate. It attempts to make a new high here on volume, makes a new high by about a cent, pulls back, but really there's nothing wrong with this. I'm not buying this 32 cent breakout of pre-market high for a 7-cent move. I really want to be patient with this in case it really starts to squeeze and we get a move like we saw back in October when this whole conflict in the Middle East really kicked off. So you can see that the stock begins to hold the 9 and 21 EMA, no problem. You know, makes a new high, fails to follow through, but it's still holding up extremely well. That 9 and 21 EMA is acting as support. It begins to grind higher before volume comes in over 50 cents and the stock begins to go vertical. As it trades above 50 cents into 60 cents, I'm starting to take profits as this goes vertical. You can see a little bit of a blow off here above 60 cents. In addition, I'm taking profits into this move. It pulls back to the 9 EMA, makes another new high into 70 cents, and I'm taking profits. This is a momentum trade, and as it begins to get vertical, I want to be scaling out. Now, when you're trading a stock like this, you want to look for those signs that we talked about, and you don't want to be buying this as it goes vertical. That's where you should be selling. So you should be looking for those subtle signs like, okay, the stock puts in a low at 26 cents, puts in a higher low at 27 cents. Volume starts to come in as it tests 30 cents. It begins holding over 30 cents. These are all checks in favor that are alluding to a potential big move in this stock. And we have the news and the catalyst in the market to support this trade. And again, I can't stress enough, we know what happened back in October. I want to look for a move like that. This isn't a trade where I want to scale out 5 or 10 cents. I want to wait for this stock to go parabolic to start selling into. You don't want to be the person that's chasing this up at 60 cents. You want to look for those subtle signs. Following that, we get a little bit of a blow off on volume into this move. The stock puts in a higher low and a lower low, and for me, the trade is over. I think I did end up holding about 15 to 20% of the position just to see what would happen into the close, but I was scaling out of the majority into this move above 50 cents and 60 cents and definitely into 70 cents. And also, just quickly, we mark off this 70 cent level and zoom back out to the daily, you could see that this was resistance in October, and it's smart to scale out into that move as the stock goes vertical.
Not doing as well as you want, not doing as well as you deserve, and you just can't figure out why you can't become profitable no matter how hard you try. Well, let me show you why. This is your competition. The traders in this room. This room right here is full of elite traders, some of whom are making 7 and even 8 figures a year. In fact, our top guys have made nearly 20 million each in net trading profits in a single year. Let's head to my office so I can share more. So you're probably used to seeing videos of lavish trader lifestyles, trading gurus trading off of a laptop for an hour a day, heck, maybe even 15 minutes a day, and then them relaxing on some secluded beach for the rest of the day. Well, All I can tell you is that our traders train like pro athletes. They live and breathe the markets and are continually working on their trading skills. Because at our firm, that's what we found it really takes to make it in this game. I'm Mike Bellafiore, co-founder and managing partner of SMB Capital, one of the world's top proprietary trading firms located in Midtown Manhattan. And we're always looking for trading talent to hire and develop. And not just to trade in-house on our desk, but also to trade from their own home, entirely using our firm's capital. And we have numerous traders doing just that, allowing them to make upwards of 7 figures trading the firm's capital without risking their own money. But to even get a shot at something like that, you need to have the right training. That's why we're doing a new free online presentation in which we share how you can get an interview with SMB to become an in-house or remote trader, trading firm capital without risking yours and gaining access to all of our firm's coaching and resources. And the best part, you don't have to be a profitable trader yet. In fact, we prefer to mold profitable traders with our methods and our techniques. That's why we have just 3 simple criteria that can earn anyone an interview. We're looking for highly ambitious and determined traders who fit our culture first and foremost. So if you believe that could be you, sign up for the free 1-hour online presentation by clicking the link that's in your top right corner of your screen now.